Good morning, fellow traders. It is time for the market forecast. I'm John Hoagland. Thanks for trusting me with your time. It's finally Friday, January the 8th, the first full trading week of the year. And what a week it was. Emotional, lots of opportunity. And we've still got today to go. We're going to try and end this week on a strong note. As always, looking at the markets in context through the lens of risk management. This morning, the unemployment number came out. They were expecting a little bit of a boost in it. It actually came out as the same, but non-farm payrolls was a little bit off. Just kind of looking through the numbers here. They were looking for, where is it here? Where did it go? Non-farm payrolls, they were looking for an increase of 71,000. Actually, we lost 140,000. I see that we've got comments in the chat room on that. Josiah talking about that already this morning. Thank you for pointing that out for us, Josiah. We also, this morning at 9 o'clock Central Time, have wholesale inventories due out. As far as other news is concerned, the great melt-up seems to be on. Stocks continue higher on continued stimulus hopes and expected Fed accommodation. Bitcoin, 40,000 yesterday. Holy cow, who would have thought? There's another one that I missed. Crude oil prices have reached the highest level in almost a year. Weekly kickoff high, 51.55, is in play right now, opening just above that level. It's going to be kind of a go or no-go level. We're going to see that in the charts very shortly here. VIX 22.22, off a little bit from yesterday, and the dollar still maintaining price below that 90 level at 89.76. As always, like to say hello, good morning to everybody. I see we've got Danielle first in the room. Guten Tag, you win the prize. Andrea, good morning. Charles, Murph. Nasdaq over 13,000 this morning. It's amazing, isn't it? These markets are extremely resilient. Felix, the infamous Felix Escobar, good morning. Vlad, good morning. Will, Bill, Josiah, Mike, Caesar, Prima, Tim, Main Point Big Ideas, Sharon Turner, good morning. Good morning. How can I read the volume profile on the chart? Well, that is a big question. That's a longer question, and we'll take a look at that here. As we go through the charts, I'll see if I can't point something out that is something that I'll be probably looking at today. Like I said, crude is on my radar. It's been kind of off my radar for a little bit here, but the play here around the weekly kickoff high level is, of course, always going to be interesting to me. So we will see if we can't point something out for you this morning, Main Point, as far as the volume profile is concerned. Richie, good morning. Sean, James, good morning. Expediter Dean, that's a new name I haven't seen. Welcome to the market forecast. If this is your first trip here, hopefully you'll find some useful information. Prophet Eon and the Dancing Bear, JD, is in the room. Hello, good morning. All right, so let's go ahead and look into the charts. As always, starting with the daily in crude, we see that the market has been pretty strong to the upside this week with some fundamental information and a big draw in crude stocks here in the U.S. Obviously, the market driving higher. 51.55 is a weekly kickoff level, and I'm going to be probably looking at that level throughout the day today, as price may have some good interplay with it as it does right now. Good morning, Matthew Smith. I've got my cup of coffee right here as well. So we are holding upside structure since beginning of November, let's just say. And we are seeing some continuation. We had a pretty big boost in open interest yesterday. The thing that concerns me about continuation above this level is we're starting to see volume cutting off. Now, if we increase volume above this weekly kickoff level, I would say that that's a bigger probability of the auction continuing to the upside. But for the last 3 days, or last 2 days, I should say, we're seeing volume cutting off at this level. So this is going to be an interesting trading day in crude oil. Added 18,000 in open interest. That's the estimate. But on lower volume, again, 51.50 weekly kickoff is going to be a pivotal level for me today. Look at the overnight inventory. We've got some pretty decent longs in this market. By inventory, I mean when settlement is down here, 50.83. And price moves away from it overnight. This is more likely going to be shorter time frame traders, not the bigger, stronger money coming into this market. It's shorter time frame. And if they don't continue to get paid in the regular trading hours, then at some point during the session, they're likely to bail out of those longs and push price back towards settlement. Now, we've opened with a gap. We've opened away from settlement, but we've also got another caveat to this is we've opened above an important inflection level. The market kind of stuttered there for a little while, went above it. Now it seems to be holding support at that level. So we got to keep an eye on that level. If we can't hold that level, that might be just enough to cause all of these overnight longs to bail out, which would give us an opportunity for a short in that case, and it might also give us an opportunity to have the chance to buy crude at a lower level. S&Ps. Big day yesterday, huh? All-time highs, closing above the weekly kickoff high. Volume, let's get the daily up here. Volume, not all that great yesterday, and we lost 4,400 in open interest. Again, that's the preliminary number. So, you know, that loss in volume yesterday at an all-time high, a little bit unnerving perhaps for longs, but I'm not going to fight this market. I'm not going to fight these the equities. It seems to be other than Bitcoin the only place to put your money right now. So that's, I think, a big part of why this melt up continues. It's not going to go on forever. Timing is, of course, going to be of the essence if you're going to be looking for opportunities to short this. Hey, Nick Mo, good to see you. So we are above the weekly kickoff level. We've got nothing but space above us, no reference levels from the past in there. I don't want to fight this. If I'm not going to participate to the upside, I'm going to wait and see if I can catch something at some point today. We should probably squeezed out a few shorts yesterday. It's going to take some buying power out of the marketplace. But again, I do not want to fight a directional market. And right now, since Tuesday, Wednesday, Thursday, and today, we're one time framing to the upside on the longer time frame. Don't fight this. Where might we see this market crack? Well, it looks like we're going to be opening with a gap. I'm not saying that we have any long or short inventory from last night, because you would think that we may be holding some long inventory, but we've been consolidating in this area long enough, I think, to even out inventory. So I don't think that the overnight positioning is going to be a factor for us on the open, but it looks like we are going to be opening with a gap. So remember your gap rules. If we can't close that gap relatively early, we are going to be looking for opportunities for continuation to the upside. If we close the gap, it may not mean that we're not going to be looking for longs, but it's going to change the dialogue just a little bit in my head and the way that I look at markets. Yes, 37.85 was the weekly kickoff high. Yes, Josiah. So again, gap rules. Watch for the opening range trade. The opening range trade is a possibility today because we are opening, in essence, out of balance. And I think we've been out of balance basically because this market has been driving higher since, well, whenever, just continuing to drive higher. So watch that opening range trade and watch the gap. We've got our all-time high back in extended trading hours. Markets don't like that. We've seen it happen a half a dozen times on the way up here where we put in a new all-time high in the overnight, and consistently the market, even though it may pull back a little bit, consistently the market comes up and takes out that overnight high in the overnight situation there. Okay, so Nasdaq, a little bit of a different situation as usual than the S&Ps. However, we do have another situation in the Nasdaq here where the all-time high is in the overnight open interest. We added 2,600 yesterday on this move to the upside. More aggressive buyers coming into this than the S&Ps. Looks like the market is intent on looking for a move up to the weekly kickoff high in the Nasdaq, which is 13,085. Taking a look at the 30-minute chart. Settlement 12,928. Put that on your charts. Overnight low relatively close to that. I'm saying we are experiencing some overnight inventory on the long side. Again, overnight inventory, shorter time frame, weak money traders pushing price higher over time. We're going to open with a gap. If we don't continue this move to the upside toward that test of the weekly kickoff high, then I think we may see our overnight longs get out, push price lower, which might give us an opportunity for a better trade location for longs. Again, these markets are on a melt up. I don't want to fight any directional moves, any directional markets. We don't want to fight it. If we're going to catch a down move, its timing is going to be very important, and you're going to have to be patient and use day time frame levels or information to look for those shorts. And when the market is this strong, I keep hearing my dad say it always looks the best at the top and the worst at the bottom. But we see short time frame traders always looking at the short side, and we see them getting run over all the time. So if we're going to catch a move to the downside, it's got to be timed right. And until there's a market state break to the downside, any shorts that I'm going to be taking on this melt up are going to be very short-lived and very reasonable profit targets. So, unless there's a change, unless there's some sort of an event, again, I don't want to fight this directional move in our equities. Gold has slipped off its cracker, if you will. There is a risk of medium time frame market state break here. We had our low here, which was an island low, which kind of created the change in direction. We may be heading back down near that level, but we've got some work to do before that. If we're going to be looking at kind of this trend line here, it's a kind of a invisible trend line, if you will. We're kind of hanging out below that level. That's going to be a first stage of a market state break. Next stage would be breaking below the weekly kickoff low. I'm not suggesting that is anything is or will or guarantee anything is going to happen. But I'm looking at the market state break occurring at weekly kickoff low, which is 1865. We've got some work to do before we get down there. So we've opened with a gap. We have the employment numbers out. They knocked around the market a little bit here. We're holding on to some overnight inventory shorts here. Settlement is all the way up here at 1913.60. We're just kind of waiting around to see, are we going to see some more sellers come in and push this market down towards weekly kickoff low, or is our overnight inventory going to capitulate and cover their shorts and push price higher to give us a potential better trade location for shorts? The short time frame here, we're putting in lower lows and lower highs in the short time frame. That is, may offer us an opportunity. Take a look at the euro. Euro again. It's really towed this line, towed it yesterday. Looking down below it today, not finding acceptance here just yet. As long as we don't close this daily bar below this level, I don't think we are at a stage one market state break. Let's see what we're looking at here. We had added 2,600 yesterday in open interest. Lower volume, though, on a down day. That's, I think, encouraging for a continuation of the auction to the upside. Take a look at the 30 here. Okay, market kind of open with a slight gap, maybe some overnight shorts in this market taking price back to and above settlement, taking out our overnight high. I'm going to suggest trying to stay very patient in the euro today. We've just basically taken price right back to settlement, inside value from a very narrow range yesterday. The market still seems to be digesting some information and looking for direction, and perhaps that direction is going to come off of that trend line. So watch for opportunities down near that trend line today. And Japanese yen. Okay, we went around the world on 2 days here, Wednesday, Thursday, holding up pretty good on volume. We lost 1,300 in open interest on the down move yesterday. Perhaps some longs getting just liquidating. We've kind of gone to a level 2 market state break here in the Japanese yen. We've taken out this trend line. We've also had a close below weekly kickoff low. Our high for the extended trading hours, perhaps even the regular trading hour session, is very close to weekly kickoff low, which should be support from one side. It might be resistance on the other side. It's kind of an old trading adage. Some people like, some people don't, but sometimes support will become resistance, and resistance may become support. So volume, pretty decent on this move down. Losing 1,300 in open interest, some longs getting out. Closing below both of those levels, I think that the cards are, the probabilities are saying that this market state change may bring price lower. Now, we just got to wait for the dollar to wake up, and who knows if or when that's going to happen. So here's our move to weekly kickoff high, offering an opportunity for an execution there. Might be an interesting spot for us in either direction. If we can't hold above it, we look to short. If we start to build volume above it, this all may fail and we may head back to the upside. So interesting level right there for us today in the Japanese yen. All right. So it's been a heck of a week. It's only the first week in January. We've got so much more coming in the markets, and hopefully things will settle in politics and we can get down to doing business. But I'm going to try and limit my consumption of news over the weekend. It's been an emotional week, and I know it's been an emotional week for everybody. So make sure you take some time to really meditate or do something other than just watch the news, and try and do something really nice for yourself. I know it's difficult with the coronavirus and everything that's going on, but try and find something that you love to do and give yourself some time to do that. Do something nice for somebody else as well. I think that's going to do it for the forecast. No recap today. It's Friday. So I'm going to bid you adieu and hope that you have a great trading day and a nice and restful and peaceful weekend. I'm going to take my deep breath. Stay humble, grateful, and creative in your trading today. God bless you. God bless us all. God bless the United States of America. And have a great trading day and a great weekend. I'll see you Monday on the market forecast at 8 o'clock. Trade well, everyone.